This is FinTech Futures at FinovateFall, and I'm joined by Zac Streelman, CTO of REV Federal Credit Union. Zac, thank you so much for taking the time out to speak with us. How are you doing?
I'm great. Thanks for having me.
Excellent. How are you enjoying the conference so far?
It's pretty informative. This is my first time at Finovate, and it's pretty cool. I'm enjoying it.
Perfect. Well, great. Well, thank you again so much for speaking with me. I mean, just to get started, we'd like to quickly let us know a bit more about yourself then and your role.
Sure. I've been in technology in various leadership positions really for the last probably 15 years. In a lot of different industries. I've got a pretty wide swath of experience that I've worked in. I think I've had like 13 different jobs in 9 different industries over the course of my career. So I've worked in everything from logistics to private education to banking and finance, software. I've kind of done a lot. So I have a pretty heavy focus on information security, and right now I'm the CTO at REV, where I'm responsible for technology, obviously, but also digital banking, any of our new AI type of initiatives that we're exploring, as well as project management and development, and kind of a dotted line relationship with the true information security manager, because there's some regulatory things that we like to divide up duties for. So yeah, that's kind of my background in a nutshell.
So you're speaking on a panel this afternoon about third-party risk management. When it comes to working with third-party fintechs, and what risks can arise from these kind of arrangements?
Well, it's really, I think, twofold. One is the cyber risk, right? Everybody sort of goes there, and that's the one that everybody thinks about. That's actually the one the regulators look at. They want a good third-party risk management solution around cybersecurity, SOC report reviews, good vendor management program. Because obviously, if that company has something happen, it's not their responsibility from a membership perspective, it's your responsibility. And the headlines are never the, FinTech X got breached. It's always the, credit union or the bank got breached. And like I say a lot, like the number one rule of information security is stay off the 6 o'clock news. So we want to make sure that we actually do that effectively. But there's also this other category of risk that a lot of people don't really consider, which is more of an operational risk, and to a certain extent an opportunity cost lost type of risk, which is when you go with a certain vendor, sometimes unbeknownst to you, you're constrained to a certain ecosystem, which prohibits you from having full control over your own destiny. So I was just informed by a vendor last week that has an API that we're in the process of licensing, that their API is in fact not an open API, it's a closed API. They have rules and regulations on how we can actually use their API. We're not allowed to do certain things. There's a really large fintech company, I won't mention any names, and same kind of concept. They have a lot of core banking products. You can't do everything in the core with their API. Some of the things you have to call them to do for you. And so it's a loss of some of the material functionality that you as an institution might want, because it's what's best for your constituents, it's what's best for your market. Those are the sorts of things that I think are real risks to think about operationally, because what you may find is that you get down a road and you're in a contract and you don't have a way to get out of that, and you want to do something different, which comes with a lot of additional costs that you hadn't forecasted.
So I guess then, what would you say are the key things that financial institutions need to do to effectively manage these risks?
So I think a lot of things are analogous to what I would call a good security program, right? A good vendor management program really starts with 2 very, very important criteria, and without them, nothing else will ever happen. The very first thing you have to have is executive support. Because if your executives don't buy in to the idea of a good vendor management program, you will never have one. It will always get overridden. The other thing you have to have is policy and process, right? You have to have great, explain it like I'm 5 years old type of policy, right? This is what we do, this is how we do it. And the process needs to be something that someone who doesn't do that job on a regular basis can follow, right? So when you think about managing vendors, when you think about managing the risk of third parties, you think about how do we effectively onboard people, right? We want to do business with them. We want to make it easy to do business with them. Therefore, let's have a defined process. So you create a solid due diligence package, and the same one is the same due diligence you use for everybody, and you go through a process and you make it templatized, you make it kind of automatic. It's a really good way. It doesn't eliminate all risk, but what it does do is it shows your regulators and it gives you the assurances that you've taken all the appropriate steps, because there's no one who can say we eliminate all risk, right? That just doesn't happen. But as the attackers get more advanced from a cyber side, or as these technologies advance from an API, connectivity, operational side, we're going to see more and more things that are specific to those individual systems, right? And so it's just really important, I think, to have a thorough program, have a good policy, and really have your executives support the whole program.
Sure. And, I mean, do you expect to see more regulation coming into the space, and particularly around bank and fintech partnerships, particularly around kind of banking as a service as well?
Yes, I always expect there to be more regulation because that's what the government likes to do the most. I don't expect that we will see a decrease in regulation, although I never would have predicted the Chevron decision by the Supreme Court either. So I suppose there could be some relaxing of the rules, or at least a more formalized process for how the rules are applied. That being said, I believe that there is more regulation coming, and usually in cases like this, it's because something catastrophic happened, right? So we have the CFPB because of the 2008 financial crisis and the Dodd-Frank Act and all of these things that created that, right? So usually it's when the government acts from a regulatory standpoint is in response to something. And so as the fintech ecosystem continues to evolve, as you have more and more fintechs that are operating kind of like financial institutions but don't have a charter, you're going to start seeing, I think, more regulation in that space.
With the rapid rate of change then when it comes to technology shifting customer expectations, how important are these partnerships then for banks, and especially smaller institutions that might not have the budget of the larger players to do everything?
Well, economies of scale are a real thing. REV is a wonderful place. It's a great place to work. It's a great place to live. But it's $1 billion credit union. And there are absolutely economies of scale that play into that for us, where we would like to punch above our weight class and have a different experience than maybe what we have. But that is equally, if not more so, true for a $500 million credit union or a $50 million credit union. Community banks in the same asset class have a very similar story, right? So I think one of the advantages of the rapidly changing and rapidly evolving and rapidly emerging fintech ecosystem is that some of the smaller institutions like ours can take advantage of things that only a few years ago were not available to us, right? And so I think change in that sense is a positive. However, I will caveat that by saying that just means you have to have a much stronger vendor management program, because otherwise all of that change is going to catch up with you and you're going to have to do reviews. So, for example, if a third party has a third party of their own, so a fourth party to the credit union, that changes, that's material, and they collect data, and suddenly that data is now, say, stored outside of the US as opposed to stored in the US, that's a material problem. So you have to have a good visibility and you have to maintain that, which is, again, why it goes back to having a program and not having just a event. Does that make sense?
Sure. No, it does. I mean, you touched on a few things here, but how has REV kind of approached its own kind of fintech partnership strategy then?
Well, I think for us, really, it is about being very, very surgical, right? And it's kind of the same conversation I have with people about AI. There is no umbrella AI. There is no umbrella fintech, right? Everybody sort of is in their own niche and they're trying to serve their own purpose. And if you really think about it, that's kind of what we want, right? We want this almost a la carte, ad hoc sort of ecosystem where we can choose the right partner to do a single thing. And we're very surgical, we're very intentional, we're very personalized in how we deliver that. And so strategically, I think when you look at picking these partners, you look, and we look at REV at, okay, do you have an open API? Because we want to be able to extract all of the data and we want to put it into our analytics platform. What is your pricing structure? Are you brand new in the market? Are you established in the market. All of those things play into the relative, what I would call risk profile, right? If someone doesn't have an open API, then that's going to be a huge mark against them in a day and age where somebody said yesterday, data is the new gold or data is the new oil, and people have been saying that for a while. If that's really true, then we owe it to ourselves and to our members to make sure that we're gathering that and using it in a way that is most advantageous for them. I mean, credit unions are not for profit. We're a stewardship organization. So if what we're doing is actually not in the best interest of our members and handling their data falls into that category, then we need to be doing something else. So it's really important that you have a solid strategy.
Sounds great. And just to finish things off then, I mean, credit unions are still very popular in the US. What are some of the key advantages that you think that credit unions have over some of the bigger players maybe?
Well, I think the main thing really is a personalized service, right? And one of the things that the FinTech ecosystem is doing, and certainly again, the shows like this where vendors come out and they demo their new products, like I learned a bunch of stuff that I didn't even know was possible just over the 2 days that I've been here. I really believe that credit unions can take a phenomenal digital experience and marry it with one-of-a-kind in-person customer service. That's kind of the sweet spot, right? We don't have customers, we have members. And so what we want to do is we want to serve people who belong to something. There's a lot of power in belonging to something, right? It makes people feel good, it makes people have a real sense of belonging and of importance, right? The people want to know that they matter. And I think credit unions can provide that much more customized, much more tailored service. And because we're a not-for-profit, we can usually do that in a way that is actually more financially advantageous for our members too. So I think we do serve a very specific purpose. One of the things that we take really important at REV is that we really want to create stronger communities. I believe personally that stronger communities create a stronger REV. We have, over the last 5 years, we've done more than 10,000 volunteer hours in the community. We've contributed to a whole bunch of charitable organizations. We've managed to give to financial wellness initiatives. We have branches in our high schools, like literal physical student-run branches in 5 high schools around Charleston. We are really making a commitment to our community, and I think at the end of the day, that's typically what you don't see from the large banks, right? When you come to REV, you come to a credit union, you're a member, you're not a number.
Sounds great. Well, Zac, again, thank you so much for taking the time to speak. It's been a pleasure.
I appreciate it. Thank you very much for having me.
Thanks.